I have to say, I think the only way to stop another crisis is through structural changes in the banks. Banks are too big to fail, and we have to alter that.
It may sound very simplistic, but I just think you could change regulation quite radically and force boards, therefore, to take responsibility for their own actions and not allow the regulator to take on all the load.
The priority is to have a mission to serve customers and not necessarily a mission to make money. And I think in the long, it's a cliche, but I think in the light of recent events, I think that is something that I think has to be a cultural bedstone for how banks manage themselves.
I think the more independence in boards, the better. I mean, I think the one thing they can do, right, is they can do something about culture. They can do something about making judgments about people. So the more kind of independence there you have, I think the better.
The question we want to ask you is, will banking reforms actually damage economic growth in the UK? You all decided? Almost split. Are there any questions in the audience?
I found the evening very interesting. I work in a Nordic bank, which I think are relatively well-run banks. You know, for me it was mainly to see what was the difference. You know, is it just the underlying fundamental factors of banks, or was it mainly a question of board and management?
What I found particularly interesting in the evening was something Professor Julian Franks had said. He had talked about bringing in an ethical part of the board that people can consult.
It's always a fantastic thing to have different perspectives. So when you mix a regulator with an investor, clearly these are two people with different objectives. So when you see them together on the same panel and you see them agreeing on certain issues, then you know you've hit a sweet spot. So I thought they were the right people to have there.